Let's get insights from Raj Mohamad, Managing Director of Five Pillars, an Islamic banking and finance consultancy. It's interesting to note that, it's not just Islamic nations which are into Islamic finance. I mean, interest is coming worldwide.
Indeed, yes. What's happening is there has been an increased awareness. Many countries globally are looking to either facilitate or try and accommodate Islamic finance within their existing conventional framework, and this is primarily being fed by new money in the Middle East and Muslim nations due to an increased oil price and also a demand for more Islamic products. After the 9/11, you cannot remove that from the equation. A lot of the Muslims have become more aware of the obligations and are moving towards Sharia compliant products. So that about has brought a new liquidity for money managers to tap onto.
Where are you seeing most interest? I mean, what nations like, or rather cities like Hong Kong is also getting into the act?
Yeah, it's interesting to see that most of the, or if not many of the non-traditionally Muslim countries are jumping into the foray. And in particular, we have seen and heard and even read countries like Japan, Australia, and of course Hong Kong, and even Thailand, and China has issued one Islamic banking license too. So these are places where we are seeing new increased need coming from, and it's an excellent opportunity for Islamic finance, because what they're looking for is there isn't a depth of product, and there needs to be more deployment of such funds, and these economies, we believe, are the ones that's drivers of the next century or so. So for that reason, these countries are positioning themselves to try and attract these funds.
Where exactly are the opportunities? Because when you talk to people in the industry, a lot of them point to SUKUK bonds, Islamic bonds. Is that where the most opportunities lie?
Basically, if you look at any financial products, you have the debt side, and then you have got the equity side. And the debt side is represented by the so-called fixed income equivalent, is traditionally known as SUKUK. And then what's happening is that has traditionally been very easily accepted, and simply because it mimics a cash flow similar to the fixed income. What we're also seeing increasingly is also a increased amount of equity products coming in. What's lacking in the market is there isn't enough products in the market on the Islamic side for, I would say, for the institutions, for the Islamic monies to go into. So I wouldn't exactly compartmentalize and say that the monies are going primarily into sukuks or whatsoever, but they are, even private equity, we've got the Islamic monies going into.
How do we make that transition from conventional to Sharia compliant products?
You see, one thing that the market has to be aware of is Islamic product is not a totally new product. It is basically a conventional financial products done in a different way, so invested in different sectors. The risk management and the responsibilities of all the parties involved are different. So Islamic finance has equivalent for almost every conventional products available in the market, except shorting or the so-called structured products. We see that's devastating is costing in the market. So I think the conventional money should look at Islamic product for its merits and its value, rather than looking at it at a totally different segment. I think if that mindset would help them open up a totally great opportunities.
Okay, Raj, we have to leave it there. Raj Mohamad, Managing Director of Five Pillars. We're all